Did you know that cash flow issues are a leading cause of business failures in the construction industry? Extended payment cycles can cripple operations, leaving companies struggling to meet payroll and supplier demands. Imagine securing a profitable contract, yet facing insolvency due to delayed payments. This is the harsh reality for many construction firms. Let's explore how these cash flow challenges impact the industry. Invoice factoring is a game changer. It allows construction companies to convert outstanding invoices into immediate cash, bypassing the long wait for customer payments. But how does it work? Unlike traditional loans, factoring focuses on the creditworthiness of your clients, not your business. This means even if your credit history isn't perfect, you can still access funds quickly. Invoice factoring and discounting both offer cash flow solutions, but they operate differently. Factoring involves selling your invoices, while discounting is a loan against them. Choosing the right option depends on your business needs. Factoring provides comprehensive services, while discounting offers more control over customer relationships. Let's weigh the pros and cons. JCT contracts are the backbone of UK construction projects. Integrating invoice factoring with these contracts can streamline cash flow, ensuring timely payments and reducing financial strain. Factoring companies value the structured nature of JCT contracts, offering competitive advance rates. Understanding how to align your applications with these requirements is key to optimizing benefits. Different construction sectors face unique challenges. Groundworks contractors, for instance, often need early project funding. Factoring provides the flexibility to manage these sector-specific needs. House builders and commercial developers can also benefit from tailored factoring solutions. By understanding your sector's needs, you can leverage factoring to overcome cash flow hurdles. Implementing invoice factoring isn't without challenges. From managing costs to maintaining customer relationships, it's crucial to address potential hurdles proactively. Selecting the right factoring partner is vital. Look for industry expertise and flexible terms to ensure you maximize the benefits while minimizing risks. Invoice factoring can transform your construction business by improving cash flow management. This strategic tool enables you to focus on growth and project delivery without financial constraints. By embracing factoring, you'll unlock your company's growth potential. Improved cash flow means more opportunities, better supplier relationships, and the ability to take on larger projects. Recap: we've explored the cash flow challenges in construction and how invoice factoring offers a solution. From understanding JCT contracts to choosing the right factoring partner, you're now equipped to make informed decisions. Call to action: consider invoice factoring to unlock your company's growth potential. Reach out to a financial advisor today and explore how this tool can transform your business.